Hi, it's me, Mr. MindWealth, and in case I haven't mentioned it earlier, please subscribe to our website www.mindwealth.co to get a lot of cool and interesting and edgy information on your career, wealth, and spirituality. So I'm gonna just take you through this chart right now. I haven't done this before or prepared for it or anything in terms of the specific chart, but well, I've been in this business for over 25 years and I know what I'm talking about. So, technical analysis is can be both a science and an art. I think it is a science and an art. So I'm just going to try and get a feel for this ETF uh, called AAXJ, which is the iShares MSCI All Country Asia ex Japan ETF. Essentially, equity. It's like the bellwether equity index for Asia ex Japan. So I'm trying to get a sense of what this trend is like and how it's been changing. I feel like buying this chart. This is a monthly chart, so it represents the prices. The opening, close, high, and low of each month. It's a monthly candlestick chart. Candlestick means open, high, low, close, shown in this manner here, like a candlestick visually. So I'm trying to get a feel for the price action here. All right. What do I see now? Why am I interested in buying this right now? And what are the concerns? Well, I'm interested in buying it for two reasons. One is it's broken the prior high, and that's usually a pretty bullish sign and indicative of a long term uptrend potentially. The second reason is that typically when you break out sustainably above out of a channel, and I'm taking the liberty of calling this a channel even though we broke out earlier and broke back in, it can lead to some interesting price action on the bullish side in the case of an upward break. There are other reasons as well, but really it's just a breakout of a new high and getting a sense of, it just feels bullish. It just feels that this chart hasn't caught up to a lot of the developed market charts that I've seen out there. Okay. Uh, if I look at Fibonacci's, I'm sure I can find other reasons to buy this. But let's take a look at a couple of fibs and get a sense of the target out here. Okay, so I'm gonna look at. Let's look at. Let's look at this and this, let's say. All right. Okay. So we've come from this high, which is 80.01, to this low here, which is, as you can read on the left of this chart, 52.75. 80.01 and 52.05. So let's take a look at this. Okay. Okay. So here we are. 80.01 and I think it was 52.75. Oops. Oopsie daisy. Yep. And no, sorry, I put this in the wrong place. This should be written up here. .75, and I'm just gonna copy these Fibonacci levels from earlier. So essentially 161.8% takes you to 96. This takes you to 124. I plug in these two levels here that you see, and I then looking at these different Fibonacci extension percentages that you can see. So to me, an immediate target is 96.85, and subsequently 124.11 is what I think we can get to. Of course, we can go much higher eventually, but if you're talking about the next few months, the next 5-6 months, then this is where I see it. Why would I now not buy it? What would make me hesitate? Well, I would hesitate fundamentally because the market is obviously pretty, well, not massively overbought, somewhat overbought. As you can see in this RSI chart, bear in mind it's a 10-year chart. Every time the RSI is at these levels, we've seen a big correction down here. But the RSI was at a pretty high level sometime in 2017, and we still saw another 15% to 13-14% move up to somewhere to 80 or so before the markets corrected. And yeah, I think we will get to a top. So it's not the safest buy, but it's a bit of a momentum play, I guess. So we will get to a top, but I think the top could be a couple of months away potentially. And if what would make me change my mind? Well, I'd look at the daily and weekly charts to change my mind. So let's look at those charts for a second. I'm just going to quickly try and save this. Monthly trends and Fibonacci extensions. I'm just going to save this and take a very quick look at weekly charts to try and see if it makes sense to buy in the weekly. Oops, it is really overbought on the weekly charts. Damn. Okay, in fact, if I try and draw a trend line here on the price. Oops, I think my dog's barking the other corner. Apologize, somewhere in the house. If I draw a trend line here, yeah, luckily it's not what I would call a, yeah, I wouldn't say it's a divergence, but you know what I mean. It's this is not bullish either. It's not like going up here like you see here, for example, going up. Either way, it's this could correct down. I mean, it could correct. I don't see it correcting below 77.5, 80, but it could get there. So we're talking about 7%. We're talking about 7 to 10% downside, and we're talking about an upside up to, where did I go, 96. So yeah, around 13% upside. Not the greatest of risk reward. So I would be very careful if I bought this chart on the basis of these weekly charts that I see here. I might still buy it, but hey, this guy is, the slow stochastic has been here for a long time and could start to curl down. So that would make me a bit nervous. Anyway, well, that's it for me. If you like this, check out our YouTube channel, MindWealth. It's one word, MindWealth. Like us there, subscribe to us, and do subscribe to our website, www.mindwealth.co, where you'll get some pretty authentic ideas to help grow your career, grow your wealth, grow your mind.